Hello everyone. Today we come back and look at my experiment investment again, and we see that the price is now 73. When I bought it was 82, so I lost about $2,900, and for $2,940. Yesterday I lost 3,300, so I lost less today. However, I lost more in June when we go to $60. I lost about 8,000. But in May, when it was 97, I gained about 6,000 dollars. So the price is very volatile. That's why, that's why it, like gained and lost so much because the price is so volatile. And let's see today, like today actually the good news, it actually went up from 72 to 74 and come back to 73, 78. So today actually a really good day. Ethereum went up and Bitcoin also went up. So my prediction is in August maybe went up to 77. September maybe went up to 83 at the end of September, and at the end of the year, $92. And actually prediction is higher than 100, only 36%, and higher than 82 is 58%. So at the end of the year, at least it's higher than 82. However, I think 92 it should be a good I think it's achievable at 92 at the end of the year. But Kalshi prediction is this one, and Kalshi prediction is actually pretty good. And yeah, and let's say look at the stock market. We say PKW now it's 149. It actually went up a little bit today, about 0.36%. S&P 500 went up 47 points, 0.62%. And Dow Jones Industrial went up 151 point, about 0.28%. Nasdaq Composite 100 is went up 342 point, about 1.3%. And gold actually went up a lot today to $4,400. WTI oil went up to $77.56. And we look at 5 year, it went at 5 day, it went down from 82 to about 74, and now went up to 77. And SpaceX today actually doing really well. Went up from 114 to 133 in 5 day. Actually went up from 107 to 133. So SpaceX doing really good, and this is the company that I'm really looking, and I'm gonna go buy when it under $100. I'm gonna buy me some, and when in January if it stay around $100, 110 or so, I'm gonna start buying some too, because I think at the end of January, I think some of more people able to sell the share. So, it should be coming down some more. So during that time, I'm going to stand by some. And today, let's see, I want to look at the finance news today. The first The first is the United States law 2,300, 23,000 jobs in July. It was significant. It was significantly worse than approximately 80,000 job economy expected. Figure total non-farm payroll 23,000, negative 23,000 private sector plus 30,000 and government employee negative 53,000. So when you look at this number, we can say that it's a good thing because the government employee does go down and then the private sector it went up. So I think that's a good thing because like government job is small governments always good. Unemployment fall to 1.1% because the older people and baby boomer they just went out of the job market. That's why the unemployment came out, came down. Labor for participation rate is 61.4%. I say baby boomer, like a lot of baby boomer out of job market right now because they retire and they don't need a job anymore. June job growth will revise down to 20,000. Previous 2 months were revised down by a combination of 103,000 jobs. The unemployment rate fell even though the economy lost jobs because fewer people were participating in the labor force. That is not necessarily a sign of strength. But like the good thing is like when the negative job report, so the Fed cannot increase the rate neither. So it is a double-edged sword. If the job report is too weak, so it's bad for the economy. But if the job report too strong, the interest rate might be increased. So it's a double-edged sword. So like the job number should be like, maybe like if it's too good, it's not good neither for the investor because increase when the Fed increase the interest rate and make increase the interest rate that make the stock price is come down. Stock price and crypto and everything come down. So it's now it's only lost about 23,000. So it's not that good news, but it's not that bad neither. The decline will concentrate in government employee goods producing industry at approximately 25,000 positions. But total hiring was still extremely weak. Why does it matter? The economy may be entering the low growth period. Weak month does not con- 1 week month does not confirm a recession, but the downward revision make report more concerning. Stock rose because the Fed rate hike expected fell. The initial market reaction was positive. Nasdaq Composite 100 approximately up 1% to 1.3%. S&P 500 approximately 0.4% to 0.6%. Dow Jones Industrial up about 0.1 to 0.2%. Consumer discretionary and technology share led. They increase the most. Energy share generally lagged. Before employment report markets estimate about a 55% probability September rate increase. Reuters reported that this probability briefly fell to around 20% following the release. That explain the apparently strange reaction. Stock rose after bad economy news because investors believe the Federal Reserve, would be less likely to raise the borrowing costs. The risk, the risk is that bad news is good news. Only works temporarily if hiring keep weakening. Investor may begin worrying more about recession and declining corporate revenue than about interest rates. Treasury yield drop. The Victor report caused investors to purchase Treasury security 2-year Treasury yield approximately 4.19%, 10-year Treasury yield approximately 6.64%. Third-year yield remain historically elevated. 30-year yield, 30, 30-year yields remain historically elevated. Bond price and yield move in positive direction. Increased demand for Treasury bond push their price higher and yield lower. This can benefit technology and other growth stocks, home builder and real estate companies refinancing debt, gold and other non-interest bearing assets. However, the 10-year yield remains high enough to keep mortgages, corporate borrowing, and consumer credit expensive. Federal Reserve now faces a difficult decision. The Fed had two responsibilities: maintain price stability and support maximum employment. Today's report increased concern about employment, but inflation remained above the Fed's target. Higher oil price also create a renewed inflation risk. September decision will probably depend heavily on consumer price index inflation, producer price index, excuse me. All right, I'm sorry about that. Let's keep going. The Consumer Price Index PCI, Producer Price Index PPI, retail sales wage growth, workers employment data, oil prices. Market The market presently lean toward the Fed holding rate steady. Rate increase is still possible if inflation is substantially harder than expected. An immediate rate cut would likely require an additional evidence that the economy deteriorating. Fine, the next week inflation report is now critical. The stock rally will face important tests when CPI report is released. Three possible outcomes: inflation result, um, probable market reaction below expectation, stock and bonds should rise, dollar may weaken near expectation, market may consider near current level above expectation, yield and dollar could rise, stock and crypto may decline. The natural combination would be persistent inflation alongside the decline in employment that would resemble stagflation and leave the Fed with no easy policy choice. So when they decrease rate, the inflation go up. Now they decrease rate, so the employment go up, but make inflation also go up. So that's why it's hard for the Fed to do. We see gold rose sharply. Spot gold climbed approximately 2.4% and around $4,342 per ounce. However, now it went up to $4,400. Yeah, the gold price really went up today because dollar is weakening, reaching a 7-week high. It will reach toward a weekly gain about 7%. Now the previous metal also advanced, silver approximately 3.4%, platinum 1% up, and palladium approximately 0.4% up. Uh, Gold benefit from falling treasury rate, weakened dollar, lower Fed rate high expectation, Middle East uncertainty, demand for defensive asset. USB Bank reported project gold could reach 5,000 by early 2027, although that remain a forecast not guarantee. The dollar weakening follow the job report. Dollar index approximately negative 0.46%, euro approximately $1.15, dollar yen approximately 157 and 62 cents. Japanese yen strengthened around 0.5%. This also because the US government and Japanese government actually intervene and make Japanese yen a little bit stronger because weaker Japanese yen make import from Japan is easy and export to Japan is harder. And also the American business in Japan, they make in Japanese yen and they exchange to dollar, make it less. The revenue is lower when they convert it to dollar. So that's why American don't want Japanese yen too weak. The dollar decline because Western reduced expectation that the U.S. interest rate would increase. Higher interest rates ordinarily attract foreign capital juice. Low expectation makes the dollar somewhat less appealing. A weaker dollar can help U.S. multinational company, gold and commodities, emerging markets, international sale translate to dollar. It can also make import products more expensive, creating additional inflation pressure. Oil remained volatile because of Iran and Hormuz. Approximately price Brent grew 83.33 per barrel. West Texas Intermediate crude oil about $78.18 per barrel. Brent crude gained about 0. Like 0.84 dollar, pretty much 84 cents. WTI gained 89 cents. The Strait of Hormuz remains the principal geopolitical risks. Iran had discount restrictions or transit fee affecting U.S.-Israel connected shipping, while negotiations involving Iran and Oman remain uncertain. Additional risks include the Houthi attack connected to the regional conflict. If the Houthi attack will be in the Red Sea and will shut down another critical strait by the Red Sea. So the Saudi Arabia gonna be in trouble. Possible attack affects Saudi Arabia, disruption to Caspian oil export. Continue Russia-Ukraine infrastructure attacks. High oil price could raise gasoline transportation, manufacturing cost, complicating the Fed inflation fight. Nine AI-related earning continue supporting technology stocks. Cloudflare reported quarterly revenue $696.1 million, annual revenue growth 36%, full year revenue forecast to 2.864 to 2.870 billion dollar. Adjusted 2026 earnings per share forecast to 1.25 to $1.26 per share. Cloudflare added approximately 2 million developers during the second quarter. Demand for its workers platform, cybersecurity service, and AI infrastructure drove its improved outlook. Its share rose sharply after the announcement. Atlassian, Atlassian, Twilio, and other software company also rarely follow strong reports. This show that AI spending is spreading beyond the semiconductor manufacturer into the cloud software, networking, and cybersecurity companies. The concern is valuation. Even a strong company can become a risky investment if its share price assumes many years of exceptional growth. Can Airbnb rise to a 4-year high? Airbnb delivers strong second quarter results. Revenue $3.61 billion, up from $3.1 billion. Analysts estimate approximately $3.57 billion. Earnings per share $1.37, up from $1.03. Night and Nice and Experience book 148.3 million. Booking grow approximately 10%. Share rose around 14%. World Cup travel expansion in Brazil and India and stronger North American demand helped the company. Airbnb also said the hotel night booking grew nearly 3 times faster than home rental booking. Its AI assistant have reduced customer support cost per booking by approximately 16%. The company raised its 2026 revenue growth forecast to at least the mid-teens. My overall market interpretation today signal are mixed. Short-term bullish, lower yield, diminished rate, hike expectations, strong earning, and continued AI spending. Medium-term caution, payroll and contracting, previous employment figure were revised lower or remain an inflation risk. Main bullish confirmation, CPI comes to cooler than expected while employment stabilizes. Main bearish warning, inflation remain high while employment and customer spending continue to weaken. For my sole position, for my crypto Solana position, the lower yield and weakened dollar are generally support for crypto. However, weak employment could become bearish if the market shifts from celebrating the Fed pause to fear of recession. The CPI report and Bitcoin ability to hold major support area will therefore especially important next week. All right. Thank you all for watching. And again, I dropped my prediction at the end of the year to from 98 to 92, and my revenue about 4,000 this year, but will be to 13% gain for this year. And I hope it's my prediction wrong and maybe go higher than $100 because I would love to have at least 50% like year to year gain instead of only 13%. But 13% is still good. And please continue to monitor my experiment with me. And I will see you again in the next episode. Thank you. Bye bye.